What's going on, everybody? TG here, back with another video. Guys, today we have an interesting story on two SPAC stocks that have been going crazy recently. The first one is Climate Change Crisis Real Impact. I know, kind of a mouthful, but it's an amazing stock that has been going up a lot recently, over 65%, based on their new merger with electrical vehicle charging provider EVgo. We also have Churchill Capital Corp. 4 that is in talks of partnering or merging with Lucid Motors, another stock that has had a lot of volatility and a lot of interest recently. Before we start this video though, we have a Discord and a link in the description below. Go in, join, it's totally free. We call some sick trades in there with a great group of individuals. And of course, just hit that like and subscribe button, but let's just hop right into this video, guys. I'd figure we start off and talk about Churchill Capital because that stock has continued to surge on news of a potential merger with Lucid Motors through the blank check company, even though they have yet to deny or confirm the rumors. And that's why the stock had quite a bit of an interesting day today. Stock started up very high, up over 20% intraday, and then just crashed down about 17% at the most during the day. And then it rallied back and finished the day up over 11.5%. The shares jumped again today on more optimism from a merger with this Lucid Motors. So they have been in talks with them for a while. And Lucid Motors has also been in talks with a public investment fund of Saudi Arabia to create an EV factory in the country. That is huge because this EV manufacturer also recently completed the construction of a 590-acre production facility in Arizona. So obviously there's a lot going on with the stock right now. There is a lot of hype on it. And that is why, as you guys can clearly see, this stock is up 145% from its debut. You clearly see here, it just stayed there until they found that potential merger. And even though the stock hasn't even merged, it's still up that much. Now, like I said, the company has not confirmed or denied any of these accusations, but it is looking pretty likely that they are going to do it. And if Churchill Capital and Lucid did end up merging, the EV company would also draw in a hefty amount of cash from the SPAC to fund its ongoing operations, which is huge. That means they don't need to dilute, which means the stock can stay up big. All of this news for investors jumping at the chance to buy a blank check company that still may or may not be the EV darling that can compete with Tesla. It's something pretty extraordinary, and that's why its market cap has been boosted up to about $6.93 billion. That's obviously a decent amount, but compared to some of the other EV players out there, it's not that much. I think it's worth the risk taking, especially if we see a dip again. I mean, today was a perfect opportunity. If you look at this thing, man, getting it under $20 is a very good opportunity, especially if this merger goes through and they have a ton of cash on hand. Now, the other one I wanted to talk about is this one, Climate Change Crisis Real Impact Acquisition. Now, this thing has been on a move recently, being one of the most trending stocks in the world the past couple days on StockTwits. The combination with this SPAC will provide with the EVgo charging facility, and this results in the valuation of a newly combined company expected to be $2.6 billion. So obviously, again, not a super high market cap compared to some of these other ones. But the good news about this is EVgo is already a really successful business, and they're the leading owner and operating of fast charging stations in the US. And they also have partnerships with big automakers like General Motors and Tesla. And it focuses on its fast charging stations in commercial settings, like grocery stores, shopping centers, and other things such as like Kroger's and Albertson. So obviously there's a lot going on with this stock, and it's actually kind of hard to find, this particular stock, because if you type in CLII on Google, like some other weird company comes up. So you have to like find it on a different ation. But obviously, as you guys can clearly see, again, this stock it starts off on its low thing and then just shoots straight up. They'd had that merger, and that is why it has gone up so much. Obviously, retreated a decent amount today, about 10.6%. But, it's a solid company. It's up 100% from where its SPAC debuted. And, investors are obviously really excited to get on this action today because the EV charging infrastructure likely has a long runway of growth. These are the future. This is a forward-looking company that's going to continue to grow and grow as more electric vehicles get on the market. So, the EV market is almost 100 times larger in 2040 than it is now. And that's huge. And especially if they take a big chunk of the market share, that means companies like this are going to absolutely soar. So I'd put it into perspective. Don't throw all your money into these SPACs because obviously it's a little risky now, especially when the SPACs already merge, or in this case, haven't merged yet and have gone up so much on anticipation of a merge. But I really like Churchill. I think Churchill is going to be a great one. It's probably my favorite SPAC out of all the SPACs right now. And I think that's why it's had so much success in this field. And that's why it's up 150% pre-merger. Now, you have to be warned because if this does merge, you might not see a big pop like you're expecting just because of the pre-anticipatory run-up. We talk about that a lot and talk about how important pre-anticipatory run-ups are, and you don't want to get burned. So your best bet here would definitely be shares, in my opinion. I think options, you could definitely get IV crushed if things don't go up as much as you want. Because, I mean, you look at a lot of these. If you talk February 19th and you look at some of these calls at 212 implied volatility, I mean, you don't see a big movement and you're going to get IV crushed and get stuck. Your best bet is probably holding shares. You might make a little bit less, but it's definitely a lot safer. But that's really about it, guys. I think these are two SPACs to look out for. The SPACs again, right here, Climate Change Crisis Real Impact, and then of course, Churchill Capital Corp 4. Look for these stocks, keep them on your watch list and see what happens. But like I said, a small position could definitely go a long way in one of these companies. So hope you guys enjoyed. Like and subscribe and just have a wonderful day, guys. Talk to you guys in the next video. Goodbye.